In this video, I'll be breaking down how much you need to make in order to afford a 2023 Toyota Corolla GR. You should really consider following one of these rules in order to avoid making a huge financial mistake that'll end up setting you back for years to come. I've also included a link to a free auto quote where you could save up to $600 a year in the description below, but more on that later. There are 4 options I'll be going over today, and you can decide on which one suits you the best depending on how into cars you are. There are some people out there that just want to get from point A to point B, have a reliable form of transportation, and then a couple other people willing to spend a lot more and sacrifice a lot more in order to get the car that they really want. Stick around to the end of the video to find out which method would be best for your situation. This is 4-Wheel Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please click the like and subscribe button, comment down below what other vehicles that you would like to see. The first rule I'll be going over is the 24-10 rule, and this states that you must put at least 20% down on the vehicle, you can't finance it for 4 years or 48 months, and the payment can't be more than 10% of your monthly gross income. The 2023 Toyota Corolla GR's prices aren't fully set yet, but estimates hover around that $40,000 mark, so I'm going to use $45,000 as my basis just to be a little bit conservative. You'd need to put down $9,000 in this case, and with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $810.59. Take note here that you're also paying about $3,000 in interest. Bank rate states that the average monthly insurance cost is $148, but this varies a ton. It's based on gender, how old you are, and the demographic on what part of the country that you live in. So use that smart financial link in the description down below to find out exactly how much it would cost for you. This brings your monthly total to $958.59. Back to that 24-10 rule, given your monthly cost is $958.59, you'd need a monthly gross income of $9,585.90, which would add up to about $115,000 annually. I encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $5,000 or $10,000 car and put what would be your car payment of $810 in the market instead, over the course of 5 years with a relatively conservative 6% rate of return, this would turn into about $56,598, gaining almost $8,000 in interest here. Give a look at those Acorns and M1 Finance links in the description down below. Super easy to get started investing, and I highly encourage you to do so as early as you can. This is just for the first 5 years. If you were to continue on for 10 years, it would amount to $132,340, again at that 6% rate of return. The next rule here is my own. For my rule, you need to have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out both your Roth IRA and your HSA ideally. And I know it seems like a lot of saving and investing, but I also don't give you a monthly percentage rule to stick to in terms of spending. So it's up to you to decide what you want to spend your free money on. My rule here is set up to cover your bases in terms of investing and saving, and so your free money, if you want to get that car or buy a roof rack or lift kit, whatever you want to do in terms of that, as long as you're doing the saving portion, I give you kind of free rein to decide on what you want to spend the rest of that money on. There's a lot of people out there that say that nothing's guaranteed and you should live your life how you want to now. And well, that nothing is guaranteed part's absolutely correct. That's very true, but it's difficult to put a value on having peace of mind for yourself, or if you want to have a family, for your family's future. The third rule here is the Dave Ramsey rule. You've probably heard of Dave Ramsey. There's a couple of mixed opinions on him, but what he thinks is you should have a 3 to 6 month emergency fund. The vehicle can't be more than 50% of your annual gross income, and you need to purchase it in cash. Given the 2023 Toyota Corolla GR starts around that $45,000 mark, again, just on my estimate here with a little bit of conservativeness, your annual gross income would need to be at least $90,000. Ideally, it's nice to purchase a vehicle in cash as you would avoid having to pay that interest, and typically your insurance would be a little bit lower, but obviously there's not a lot of people that would have that $40,000-$45,000 in cash that they could just buy it up front. The final rule here is the 1/10 rule, which was developed by Financial Samurai, and personally one I think the majority of people trying to build their wealth quickly should consider. It really doesn't allow you to buy a new car, but it's designed to help you spend responsibly, reducing a lot of your stress, and frees up a little bit of extra money so you can put it into things that go up in value and increase your net worth quicker over time. It's pretty straightforward. It says you shouldn't spend more than 10% of your gross annual income on a car. So if you made $100,000, your car shouldn't be more than $10,000. It's going to be used in this case, and probably almost for everybody, unless you're making an absurd amount of money annually. And you must own it for at least 5 years, but ideally more. And the theory here, minimize your financial stress, free up some money to invest in assets or opportunities that may come your way. It's a lot more stressful and difficult making life decisions when you're worried about payments each and every month. Once again, this is 4Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them in the comments below. And don't forget to check out those investing apps, or if you just want to get a free quote on that smart financial link, totally free to you, takes like 20-30 seconds. You could save a little bit of money, and it just costs you